So good morning and thank you for joining us today for the Cyprium Metals Investor Webinar. Today we are joined by Cyprium Metals Executive Director, Barry Cahill, who will be providing an update on drilling at the Nifty copper project located in the northeastern Pilbara region of WA. We'll be starting the webinar with the recently lodged investor presentation, followed by a Q&A session. So with that said, Barry, I'll hand over to you.
Thanks, Jane. Welcome everyone. Hopefully everyone's in a great state of mind at the moment. I know those of you on the eastern seaboard are still in lockdown, so that's a bit sad. But here, everything's full go ahead. I'm actually really excited about where we're at. Under a bit of stress, obviously, because everyone's working really hard, trying to make our deadlines. But so far, everything's been going really well for us. So what I want to do today is I'll just do the quick introduction to the company, and then I'll actually get into progress on where we are, where we expect to be over the next short and then longer term period of time. A lot of stuff I go over, I've been over before. I've had questions through just to reaffirm and reconfirm some of those things, so I'll do that again. So for those people who are full bottle, I'm sorry, you'll probably hear a repeat of stuff. So those people who are newer or have missed some of the updates that we've done, hopefully it answers a lot of questions. But remember that for us, for Cyprium, the drive is to become a copper producer, right? We're not an explorer. We're not drilling holes for sex appeal and for fancy stuff. We're drilling to fill in a resource that exists, and we're going to go and build a mine, and we're going to produce copper. And that's the one message that we repeatedly get across. We are copper developers and copper producers. We're going to build a copper mine. We're not talking about it. So that got to get that clear in everyone's mind when they make an investment in this company. That's what we do. That's our skill. That's our expertise. And quite frankly, we think we're good at it. And we'll prove that over the next 12 to 18 months. For those who have backed us for the long term, hopefully they already know that and that they've already invested and they're sitting tight waiting for the results, waiting for the production of copper metal plate, which is what it's all about, particularly in a global electrification thematic. You're not in the thematic if you're not producing. And we see that with our lithium producers, how in recent times the lithium price has taken off and those producers have gained an advantage from it. People exploring and drilling holes and all that, when the copper thematic takes off as it will, the only reward will come really to those people that are producing copper at that time. Once the thematic's over, you don't make money. It's as simple as that, and that's what we're focused on. That's why we started the business 2 years ago. We started this business to do and to build an Australian originally copper developer, and then of course the COVID issues took over and we tended to focus more on Western Australia. Even though we have our Australian-wide ambitions still, we have projects all over Australia that we're interested in. It's really quite difficult to go interstate with all sorts of things at the moment. So we've focused in on West Australia. We've got the Nifty project, which I'll talk mostly about, where we're going to get into production. So we've got that focus on there. And then we've got our other projects, which I'll touch on briefly. As I keep saying, near-term copper producer. 2 years ago, we started with nothing. Now we're probably 1.5 million tonnes of contained copper and resource when our new resource statements come out, probably early next year. At the moment, 1.2 that we've released to the market, with our ore bodies still remaining open at depth along strike, all those sorts of things. Large hand of land holding in the Paterson province, which is a really hot province at the moment, as everyone knows. You know, we've got Telfer to the east, Havieron, Winu with Rio Tinto to the northeast. Really hot province with people spending a lot of money there, a lot of majors, and we've got a farm out agreement with IGO. Board and management, as I say, we're developers, we're producers. We want to produce copper metal plate. That's what we're about. And again, this multi-asset strategy, we're well funded, $50 million in the bank still, and moving through a process of a restart study and then going to finance. Focused on heap leach, and our sweet spot on heap leach in terms of our intellectual property is on chalcopyrite. Chalcopyrite is the holy grail of heap leach metallurgy, and we think we can crack it. And at Nifty, if we don't crack it, we've still got the concentrator sitting there where we can produce a concentrate. So we've got we've got a raffle in each lottery at the moment, but we are so confident we can crack the chalcopyrite metallurgy at Nifty. That's why we're charging into this resource, and that's why it's going to be a 20 to 30 year mine. A bit about us, which I won't dwell on too much. As I said, only been around for 2 years. Started off, we bought the Holland Air project. We drilled that out to resource. Then we went to Nanadi Well. We've drilled that out, and we've got to move on to a resource there. And then we've been chasing the Nifty Maroochydore assets for quite a number of years. Finally got hold of them at the start of the year, and that's where our focus is on producing copper at the moment. That's our team, all the horrible faces. You can read about that later. So Nifty, when it started, had 600,000 tonnes of resource in it in 81. 700,000 tonnes being mined of copper. This is copper I'm talking about, not just ore tonnes, copper. 200,000 by heap leach, 500,000 underground through the concentrator, chalcopyrite concentrate, and it's still got 650,000 tonnes of copper in resource. So substantial ore bodies still open at depth, still open up plunge as well, which is where we're drilling now. And it's like a big trough, if you like that, and it plunges down, and we're working up the top end of the trough, all in the same formation. We've got significant infrastructure on site. We've got a nearly 3 million tonne per annum concentrator, a 25,000 tonne SXEW, all the power, 21 meg, more than enough for what we need. Workshops, village, airstrip, and this huge resource. In the picture here, you can see where Nifty is located in the grey, which is a state agreement, which is a bit unusual in Australia, but not unusual in WA. So a state agreement gives you some advantages about approvals and project status and things like that. So that's pretty good for us as well. So what have we been doing? Off to the right, you can see we've been drawing a bit of core. And this is unusual. It's got native copper in it, which is not unusual for Nifty and chalcocite. What is unusual is this is a metallurgical hole that we're drilling to target the ore body, and we hit this copper in the hanging wall. And when you look at locations, the deepest part of the pit's sort of 170 metres. This is sort of 150 metres. So it's sort of in the wall of the pit, which sort of coincides with the fact that this thing's like a big basin. So we're sort of coming into that basin part of the ore body. So pretty well unexpected, I must say, but a fantastic result, really. And we'll get that core down. We'll do some metallurgical testing on it. We'll have a look at it and see what we can do, but certainly a bonus for what we're trying to achieve. We only took over in March, at the end of March 2021, so effectively only been there for 5 months, which is a very short time, and I think people don't appreciate that the progress we've made in 5 months is, for us, is huge. When we started there, we took over started on the care and maintenance with about 10 employees. We're now up to over 100. We started off flying a 19-seat plane. We're now flying a 50-seat plane, about probably to go to a 100-seat plane. We're looking at different days for roster changeovers, so different flying days. We've been refurbing the camp, biggest hotel in the Great Sandy Desert. We've got lots of people coming through and staying at the camp who are drilling in the area. So lots and lots of work in terms of what we've achieved. We've reviewed the mineral resource. We're drilling that now. Sorry, I'd hope to have a release out maybe this week, next week, with the first set of results. But at the moment, all our geology managers are working on site, on different sites on drill rigs. So I'm not pulling them off drill rigs to compile releases, but hopefully I'll have one by next week. Sterilisations we've finished for the key infrastructure. That looks all right. Trench and sonic drilling we've done. Sonic drilling finishes probably next week. Metallurgical test work's been undertaken, and I'll talk about that. And at the moment, we've got the sonic rig, an RC rig, a diamond rig at Nifty, and then an RC rig at Maroochydore. So drilling heaps of meters. We've probably must be getting close to 10,000 outstanding assays at the labs at the moment. Completed all the survey work for the government approvals. Documentation has been compiled for submission. And in fact, the first workshop with the government for the approvals process and what's required is actually on this week, which is pretty good. So we were trying to get that process underway by the end of the month. So the fact that we're going to workshop just prior to the end of the month is pretty good. Although, I don't know about how timing for that's going to go, but we'll see. So far, everything's on target, but government approvals, as you know, are at the on the government's timing, not on our timing. So we'll see how that goes. But at the moment, that's all on track. We've engaged with the TOs on a number of occasions. We've brought them to site. We've actually had a local traditional owners board meeting on site, which is good. We've been starting to employ locals. We're starting to work that program through, because remembering the heap leach SXEW is in fact quite unusual in Australia, so there's not that skill set. So we have to train people up with our intellectual property and our skill set, and we'd like to actually use some locals to do that. So we're trying to go through that process. I mean, truth of the matter is we don't care where our employees come from. We're not biased, but if we can get locals into some of that training and some of those jobs, that'd be really, really good. We completed our report on new versus refurbishment on the SXEW. So what's been happening in the industry, as most of you probably know, is there's been delays on supply materials. So the timeline for the completion of a new SXEW plant went out to over 2 years. A lot of that was based around shortage of structural steel. So what that meant is if we signed a check today, right now, then September 2023, our plant would be on site getting commissioned, which I think is almost the elephant in the room for the industry, because there's a lot of companies that are talking about finishing BFFs and BFSs and starting plant building, and they're all going to be built by next year. We've been through that process and we don't see that happening. So we've basically gone back to our refurb. And what we've done is the critical spares part of it, we've picked them all out. The longest lead time for just a critical part was about 12 to 14 months. And in fact, some of those have opened up. So there's one that was 12 to 14 months is now, when we're looking at writing a check, is 8 months. And the reason for that is if your plant's going to take 2 years, you don't deliver a critical spare in 12 to 14 months. So you cancel that order. So there's obviously been order cancellations, and some of it's come back to 8 months. So this month, we expect to sign checks for those critical parts to the plant refurb, pay 20 or 30% deposit to start the process of manufacturing, because if you do the maths, if you start that process in September, then it'll be delivered prior to the end of next year when we want to be commissioning. So in that terms, we're still on timeline. So just to reiterate our timeline, we finished the restart study by the end of this month, which looks a bit slow at the moment, but we'll see. We've already started the setup for the data room. We've already started the cash flow models. We've already engaged with financiers. We're organising some site visits. So that engagement process is taking place. Once the study is finished, the data room's finished, and the cash flow model's finished, we then fully engage for due diligence with financiers, accept term sheets, and try and get that done by the end of the year. At this stage, without having a final cash flow model, we're looking for about 100 million Aussie. Get that finalised, commence the heavy work in January, commission by the end of 22, full production by the start of 23. That's our timeline. That's our target. That's what it's always been. It's tight now, so it's not going to be quicker. We definitely know it's not going to be quicker. It's tight now. We know that. But so far, we're bashing away. Everyone's working really hard to still meet those timelines. And as I said, there's nothing to suggest that approximately we're going to be around it, notwithstanding that we've got a timeline for government approvals, but that's at the beck and call of the government departments, remembering that. So at the moment, everything seems to be on time. We look for production at the start of 2023. As information comes available and things finalise, if it's pushing out or it's tightening up or whatever it's happening, we'll let everyone know. But at this stage, we seem to be all right. And in fact, crews are already on site to start the refurbishment process on the SXEW. That's already commenced. So the other things we're going to continue on, we've started on the feed side, the front-end engineering design, that's already started. Restart study, the document's already been populated. Some of the crew are going to have some midnight runs to get that finished, but that's how these things go. Bad luck for us all, but that's the job. And then we'll into that project finance process. And everyone's super pumped, super keen to get going because we actually want to start construction. We actually want to produce copper. And as I said, the government approval process so far seems to be going okay, but let's see. Let's see where we end up. And we're just compiling documents and data. Because what you've got to remember is the site's been going for 30 years. So in each of these areas that we're working on, there's 30 years of data and documents and terms and conditions that we've got to compile. So it's not a simple job. It's quite a complicated job and everyone's working pretty hard for it. So just to move on a bit, trying to cover off on those pertinent points. This southeast drilling, we finished. This is where I think we'll get a release out in the next week or two. And there's going to be follow-up drilling to that at some stage. Southwest, we're fully into now. And again, we're seeing some results. In fact, in another slide, I'll show you some of the cuttings. And we're doing the diamond drilling for the metallurgical holes in here at the moment. So they'll be shipped. I think the first couple of holes will be shipped to the lab either this week or next week. We're doing the met testing on the trenching and the drilling here. That this sterilisation drilling is completed. All the work around for new heap bleach has been done through here. The flora fauna around the tailings dam here. Camp refurb started. We're already into the dry mess, and then we'll start the refurb through the size. We've approved the capital for that, so that's already started. We've approved the capital for the comms, so the comms will go to 4G. That work sort of started as well, so that's going really well. As I said, we're flying in bigger planes already. So far, I'd say everything's going okay, but flat out. And you can see what we're targeting with the drilling, which is what's really interesting. So you can see the underground here. You can see the gap between the pit and the underground, remembering it's like a big trough. And you can see the gaps in the resource as we move this way that we're trying to drill, and back up to the western side, which is what we're drilling at the moment. You see the heap leach sitting on top of it. If I just take you back to this previous slide, the open pit optimisation at the moment comes out this way, like that. Takes out probably half of the leach pads, comes quite close to the SXEW, which sits in here after 20 years, of course. So the first 10 years, not a problem. And then basically the plunge, that plunge I talked about is plunging to the east this way. So that's why we did that southeast first, just to see what surface stuff was around there. And now we're tidying up the holes back up the western in the shallower stuff. So if I go back to the next slide, you can see that. So you can see this keel. So the results will come out for this zone in here, which we know there's some mineralisation there. And then we're drilling in here now for this area in here. And you can see the two limbs. You can see the northern limb, which the pit's based on, and then you can see the southern limb. You can see the old underground workings. And what you can see is the pit takes out all the mineralisation. So once you get to a particular copper price and it's taken out all the mineralised zone, the pit doesn't get any bigger, which is why it gets bigger plunging to the east here, because it gets deeper. So it sort of steps out this way. It doesn't come out this way any bigger because the whole ore body's removed at a particular copper price, because it's all bound up in the one formation. Anyway, the assays commence coming through. We started optimisation on the 2020 mineral resource, which is the 658,000 tonne of copper. And then as we get the results through, we update that mineral resource. Generally, what's happening is when we're doing the resource, by the looks of it to me, we're seeing the gaps where there's waste filled with ore, but generally low-grade ore, which is what we expected because it's in that malachite, azurite, chrysocolla zone. So we're expecting, the 1.5% narrow zones, which is what it seems we're getting. So, you sit there and you look at that and you think, oh, well, that doesn't make much difference. But in fact, it does, because remembering in the pit optimisation, the tonne is costed as waste, which is a cost. And if you put any copper in there above 0.3, 0.4, then it's revenue. So it actually adds to the whole thing, which is why it's so important to us in terms of the studies and the processes and how the economics of the thing work out. So then a bit about the metallurgy. You can see here the first test, we've got nice blue water. Results been pretty good. You can see the sonic rig drilling into the heap leach. You can see the green rock. So when you see this sort of green precipitation, generally it means those assays go 2, 3, 4%, which is what we're seeing. So there's some zones in the heap leach where there's nothing, or 0.11, and other zones where there's 2.5% and upwards. In fact, some longer zones of that. So that's all coming out as expected, and we're doing a series of tests. Remembering 200,000 tonnes of copper was extracted from this ore body by heap leach, so it's well proven. We're just doing it with our IP, and the results so far are pretty good. We're getting much better results. We're on to about column 3 at the moment, and then column 4 will be a 6-metre column, which will set the parameters for the heap leach in the field, and then we'll work on some further optimisation, which is to do with our own intellectual property, which I won't talk about. But so far on our proof of concept, it's going pretty well. In fact, more than pretty well, but we've just got to go through and do the right parameter tests to make sure it all confirms. So it's reacted how we thought it would. So the mineralisation in the oxide zone is, as I said, the malachite, chrysocolla, and the azurite. You basically, as long as you get a few parameters right, you get the acid on them, and that stuff leaches, which is great, but it's an acid consumer because it's an oxide. Underneath that, you have what's called the chalcocite zone. So chalcocite's a secondary copper mineral. We basically do some different things with that, but basically the copper leaches really well out of chalcocite, and a byproduct of chalcocite is it produces acid, and that leaches in like 100 days, so it's pretty quick. So you've got to remember with these leach times, we're looking at a 12-month leach time. And again, people can't come to grips with that because, you put it in a concentrator, it goes through a concentrator, all of a sudden you produce a concentrate. Well, it's not like that. Heap leach has a recovery curve that basically goes on forever, if you like. And what we try to do is we try to accelerate the recovery curve. And I've talked about this before, and for some reason, a group of people aren't listening. Then the curve is artificially terminated, which means at 100 days, 200 days, 300 days, we draw a line up through the curve, and that's the recovery we pick. So when I say that we get 85% recovery in 12 months, we have artificially terminated the curve at 12 months. The recovery still keeps going on, but you make a commercial decision about how long you put acid on this heap before you flush it with fresh water and neutralise it and walk away from the heap and do your rehab and all those sorts of things. It's artificially terminated. The stuff doesn't stop leaching. It's a commercial decision about where you terminate it. And all our IP does is stand that curve up to make the recovery a short amount of time. Chalcopyrite, which is this thing here, that's chalcopyrite, is no different. Chalcopyrite leaches over a long period of time. And as the holy grail of heap leach, you want to squash that recovery curve. You want to steepen that curve up and then terminate it at a particular time when the recovery has made a commercial profit for you. And it's a commercial decision between balancing about how steep you can get that curve on heap leach, or whether you make more money by putting it through a concentrator and selling concentrate overseas. The difference between the two in terms of how we think is we produce copper metal plate. We don't ship a con over to someone else to go and do whatever they do overseas. We produce copper metal plate, and we don't lose revenue to a smelter. We don't lose revenue to a transport, and we ship copper. 7 days later, we get most of our money. We don't have a quotational period over 3 months. We don't have all those risks on sea transport, which has tripled in the last period of time. It's purely a commercial decision. Is when I get a ton of chalcopyrite, how do I make the most money out of it? That's all it is. And people will tell you chalcopyrite doesn't leach. Rubbish. Chalcopyrite leaches. It's the time that's the issue. It's the time. And the problem in Australia is we don't understand heap leach like that. And time again, when we've successfully leached chalcopyrite, oh, no, you haven't. Well, we have, because there's nothing else in there. So we'll crack the chalcopyrite. If we don't, we've still got the fallback plan of the concentrator, which produced 500,000 tonne of copper. How many times do I have to say it? 500,000 tonne of copper came from that concentrator. We can turn it on in a month and produce concentrate. Like, make up your own mind. Read the videos, right? Chalcopyrite leaches. It's just slow. We have to accelerate it. When chalcopyrite leaches, you get acid as well, because chalcopyrite as a byproduct, the leach produces acid, so it self-cycles the acid. We have IP, intellectual property, that assists the leaching of chalcopyrite. And it does that by steepening the curve. That's all it does. It's not rocket science, it's just the parameters. And we're like a carpenter with a tool belt. And each rock type has a different requirement in heap leach, and you use different tools. You don't use all your tools at the same time because the minerals are different. Chalcopyrite just requires different tools. There's different things that happen in the leach. And that's really what we're working on. That's our intellectual property. And I don't talk about it because we're going through a patent process right now. And watch, see what we can do. And if we can't leach chalcopyrite in a commercial sense, we've got a big bloody concentrator on our lease ready to go. And if you can't understand that, then I don't know what else I need to say. We will crack the metallurgy. You can see blue water. We saw blue water at Holland there. We will produce copper metal plate from that heap leach in the first quarter of 23, the start of next year. And we'll all stand around smiling behind a bit of copper plate. That's what we want to do. Anyway, enough of that. Bit about Murchison. Oh, actually, I'll go back. I'll just talk about the restart. So when the restart comes out, it's mainly based around the debt providers. It's about getting the finance, because we want to get finance and go and build this bloody thing. We'll release to the market whatever we can. Hopefully we can put out MPVs and strip ratios and all that sort of stuff. But if there's a difficulty in releasing that to the market, then we'll release what we can. We're not going to go and spend $5 million of shareholders' money just to put out a release to the market. We know the thing works from the proof of concept. We've got all the historical metallurgy. We've got our own metallurgy, got our own resources and our own drilling. So we'll bundle it up. You'll know it's all happened because we'll announce finance, and then we'll get on and build it and try and get information out as we can. But we're not wedded to meeting frigging standards for releases, because it just costs too much, quite frankly. But we'll release what we can. We'll deal with what we can and put it out. As I said, MPVs, costs. I mean, I've made no secret that the proof of concept costs we looked at were $1.90 to $2 US all in sustaining. I don't know where we're at with the costings at the moment, because the model's still coming together with real costs. I don't see any reason why it shouldn't be around that. If it's above or below, there'll be a reason why. Optimization strip ratios still seem to be what we started out with in our proof of concept, which we've made no secret of. I think 7 to 10 range of strip ratio. Some costs have got more expensive. Labour costs have gone up a bit, mainly on the trade section, certainly not in the higher end. Middle end technicals got a bit more difficult. A lot of people we look at are probably not suitable for what we are, what we want to do. So we've been quite selective with our workforce. People we've got are fantastic, but we've got some really, really good people. And part of the attraction is the rebirth of Nifty is quite an attractive proposition for a lot of people, because you get a blank sheet of paper and all those things you whinge about when you go to work, you can go and fix. And if you don't, it's your own stupid fault. So you can fix stuff when you start with a blank sheet of paper. You know, and all our safety is good. Our environmental's good. We're working with our traditional owners. We're not going to stand up and brag about that stuff. That's just a poison pill. You see what happens when you swan around talking about how good your ESG is. You get cut down. We're not interested in that. We want to do the right thing, and everyone understands that we're doing the right thing. But the only way that we survive is to produce copper metal plate, and then that rewards everyone. It rewards our government, rewards our external stakeholders. It rewards our TOs, rewards our own workforce and our shareholders. And that's the philosophy and the strategy that we keep pushing. We produce copper metal plate, we make money, everyone gets a reward from it. But we don't hurt people. We look after the environment. We look after our landowners, because they're our landowners, whether they're landowners or land users. And we do all those things that we need to do, but ultimately we're going to plate copper metal. That's what we do. Anyway, enough of that. So information we can get to you, we'll get to you when we can. Nifty, well, we've got some more drill holes coming from that. Looks the same, big wide zones of mineralisation. We really like this ore body. We've still got that green mineralisation at the top, which matches the acid production at Hollandair at the Q deposit. We can bring that over and we can build a project here. We see a standalone project, 20-year life, 20,000 tonne of copper, obviously focused on Nifty, so we're not kicking it along. I keep saying that if this was an exploration project by itself, it'd be their number one project, and every time they put out a big wide intersection, there'd be this huge share price uplift. But I think the focus for us is on Nifty, and people understand that. But we'll keep kicking that down the road. The core's heading down. We'll do some met test work because that's chalcopyrite as well. We'll crack that and on we go. There's also some other funny stuff in there, which is quite interesting. So as we said, we've got that crackle breccia with the high silver. That's sort of intriguing us. So we've got a bit of work to do there. But yeah, we'll kick that along. As soon as Nifty's producing, we'll get that started. And Maroochydore, the crew's down there drilling at the moment. They love it. It's a substantial deposit, this one. We've always liked it. We've always thought we could crack the metallurgy because it's on the same formation as Nifty, so the rock types are the same or similar. I don't think we realised how big it was. Now that the crew's been down there and marked out and they're drilling some metallurgy holes and things like that, having a look at the resource and all that, I think they're a bit overawed by how big it actually is. So really keen on it. And obviously, it's right in our sweet spot. It has that ability to be heap leach. It has, those complex clays and native copper portions. It has the carbonate layers, which are high acid consumers, which we see at Nifty, which we're comfortable with. And then underneath it has the sulfide, which is an acid producer, which we're comfortable with as well. So it is a bit in our sweet spot. And again, this is what we think we like to think that we're good at. We're pretty sure we can crack it. I'll have core this year, so probably early next year we'll do some net test work on that. But again, at the moment, it's not the main game. The main game is Nifty. And then, of course, the Paterson exploration project. Excuse me. Not seen a lot of news out of this because we don't actually have the data ourselves. And a lot of that's due to the delays in timing of assays in the state at the moment. So as soon as we have some information and some news out of that, we'll release some of it. Obviously for IGO, anything out of there is probably not big news for them, but obviously for a small company like that, it's big news. So our rep with those out of our crew, with the IGO guys, keeps well in touch with their crew, and as soon as we get some physical data, we can come out to market. But so far they're working hard. They're staying in our camps. We've got a small camp at Maroochydore. They're staying there as well as staying at Nifty. So they're air core drilling and doing soil sampling. They've done heritage surveys and that through our ILUA. So that's just all going. We just really got to wait for some results and just be patient about it. But really happy with progress there as well. Bit of our resource, and that's really about it. So I'll just throw it open to questions. Hopefully I've answered most of your questions. We'll see what else there is.
Thanks for that, Barry. You actually did cover quite a few of the questions, but for any of the webinar attendees that maybe didn't hear them, I'm going to jump into them. So when will the restart strategy be finalised so that we can see the full extent of works proposed and the timing?
Well, the works proposed is pretty well out in the market. We're going to rebuild the SXEW. We're going to build a new heap leach pad. Half the old heap leach pad's going into a pit anyway, and that's how we're going to do the retreat. And there's a new set of ponds. So that works, and the open pit cutback, that works is quite been quite firm. It hasn't changed. The only thing that's changed is we like the idea of a new plant, but that's not going to happen because of the timing. We're hopeful, as I said, at the end of the month, which is, it's only 11 days or 10 days away. The end of the month, we'd have some sort of report. But at the moment, I think maybe we'll be a week or two late on that. But as soon as we've got something that we can release to the market, we'll release it. As I said, hopefully with some physical parameters, MPVs and costs and things like that. But if we can't, we can't, because it's about financing it. So, yeah, look, before the end of October, hopefully early October. But, you know, as I said, this is like the time when you're working till midnight trying to get these things bloody finished. So whether you're a week over or a week under, who knows? Certainly won't be a week under, I know that. But yeah, I'm hopeful as early October as we can. And as I said, even then, I'm not convinced about what we can release to the market. And we're not wasting money trying to get audits done to bloody get things up to some invisible standard. You know, it's like crazy. So we just want to get finance and go and build the bloody thing. That's about all I can think about that.
Yeah, okay. And so will this include a net present value analysis for shareholders to determine future price points? And if not, what will the finances require for the loan process?
I don't know. The answer to that is it will have one, but whether I can release it, I don't know. But as I said, it's sort of $1.90 to $2 is what we've always said. And I'm not seeing any difference from that at the moment. Bankers will have enough to do their due diligence and put a term sheet on the table because they're under an NDA. This is the difference, right? So we can present them a standard of document, standard of information, and a data room that satisfies what they need to do. And the key part of that's a data room, because then they can go into the data room and check the data themselves and satisfy themselves. I can't do that in the open market. I can't release 10 gigs of document, and that's the problem. And the other issue is on a heap leach retreat, it's very, very difficult to get a JORC compliant resource on a heap leach retreat because the thing is not, it's not an ore body, it's just this heterogeneous mass, which is what we're seeing in the drilling. So overall, the grade is what the grade is, but there's no common zone. You can't like dig through. You just have to dig the lot. And that lends its own problems in terms of the JORC code, if you like. And that's really what the ASX is relying on, the JORC code. So we can't release anything that's outside the JORC code. And some of this stuff will be outside the JORC code. Simple as that.
Thanks, Barry. Another one that's come through. So I noticed the diamond drilling at Nifty is targeting the chalcocite covellite part of the ore body, which we already know responds well to leaching. Are there any diamond holes planned for metallurgical testing in the chalcopyrite dominant part of the ore body below 200 metres?
Yeah, that's not quite correct. Basically, the drill holes are targeting the oxide, transitional, and sulfide. We've made that quite clear repeatedly. There will be 4 pads eventually at Nifty. There will be the heap leach retreat, there will be the oxide, the transitional, and the sulfide, providing the sulfide heap leach makes commercial sense compared to a concentrate, which I'll keep repeating as well. You have to separate them out. We have to have samples of each type because, as I said, the carpenter has got 4 different rock types and he's got to use different tools for each one of them. So that the actual way we handle the chalcocite covellite is different. In fact, chalcocite and covellite you handle differently. And I'm not going to lecture to people about sulfide bloody equations because I can show them to you. They handle them differently to the chalcopyrite and even to the bornite, if there's bornite there. The same as the chrysocolla, the same as the energite, tenonite. Like you can go through all these mineralogy bloody sequences. They're all different. So you've got to try and separate them out by rock type because the rock's what makes the difference. If I put a 0.5% chalcopyrite and a 1% chalcopyrite in the same rock type side by side, I will leach the copper out of both of them if my leaching works. The grade becomes irrelevant. It's just the copper mineralogy itself in the rock type. And hopefully in a future video, I can do a half-hour presentation about sulfide metallurgy if anyone's willing enough to listen because I love it. I love the chemistry. It's like amazing. But we have to separate them out. So the samples that we get are getting all of those zones. The check metallurgy is done on the oxide and the transitional chalcocite because we know they leach. The real serious metallurgy, which we start once because we've got 10 years, by the way. So there's 10 years of all the other stuff before we get to chalcopyrite. We've got time to actually work on the chalcopyrite and crack it. I know that we'll crack it quick, but we've got to prove it. So the chalcopyrite sample is getting obtained as we speak, and it'll go to the lab and we'll do the test work on that as well.
Thanks, Barry. There's quite a few just about the offtakes and paths to sales. So if you want to maybe potentially comment on that, are we aiming to sell this straight to the end user or is there further rolling, milling, et cetera, that's required?
Funny you should ask that. So basically, the cathode goes 20 tonne to a domestic cetainer and 25 tonne to a international cetainer, and that's a lot. And then you can sell a lot wherever you like. So that's lot, LOT. We have, with our past jobs, sold it Thailand, Vietnam, Malaysia, Indonesia, India. We were looking at a European marketplace, but seaborne freight's quite expensive, so that's sort of a bit of a problem. We sold subgrade into China, and as I say, basically you get 7 days after it goes over the ship rail, you get most of your check. It's premium quality, grade A, 4 5/9, and you get $50 to $150 premium above copper price for it. Easily saleable. So generally what they do then is the cathode then gets put into a electric arc furnace and they extrude rod straight from it. In fact, I've got a bit of rod. I can run over there and get you some rod and show you, but anyway, I won't. They extrude rod, and then the rod can then be drawn into cable or tube. We've actually been looking at whether we could extrude rod on site. We actually can. The problem is our labour costs so huge that there's some doubts about the profitability, but I'm working through that at the moment. Imagine that, having a copper manufacturing facility in WA. Whoa, that'd be great. The other thing is some other products you can make from the cathode that we're looking at as well. But basically it goes to an end user. If the quality is really good, they can do other things with it. And we aim to produce quality, because that EW is like a manufacturing plant in its own right. You don't want poor quality cathode. So it sells all over the world, easily saleable, and you can do other things with it, which we'll look at in the longer term.
Thanks for that, Barry. So there's quite a few questions coming through, so I'm trying to collate them all. So there's quite a few things just on the copper price and what's going to be used in the BFS. Yep.
We did the proof of concept at 6,000 US, and it was pretty good. And as I said, I've said this again repeatedly, in the proof of concept, we tried to kill it and couldn't kill it, which is why we bought it. And then more luck than good management, the copper price went for a run. So I just can't believe that way the copper price has gone since we purchased it. So good luck to us. And I say, like, we're not the smartest people in the room here. We're just arse lucky, quite frankly. But and I'm just testing my memory, I think at about 8,000, the formation's gone. So the pit doesn't get any bigger in that area because it's taken all the formation out. So I think between 7,000 and 8,000 in the resource that we're dealing with at the moment, I don't think it makes any difference to the project in terms of the size of the pit, the size of what we're doing. And every time the copper price goes up, then it's just more on the revenue side. You can do the maths yourself. So you sort of get to this critical mass where you mine the ore body out completely as you go down the plunge, and then copper price is what's extending you to the east. So at the moment, I think at about 8,000, the whole thing's gone, which is interesting. And then just so people know, go and have a look at the resource. The cutoff on the resource is about 0.75 for the underground, for the sulfide resource. Open pit cutoff's about 0.3, 0.4. So there is mineral outside that resource that'll go into the pit that's currently in there as waste, which is again why we're drilling it. So there's actually mineral that's going to go in and go on to the heap leach. It's actually probably not in resource at the moment, which is why we started with the optimisation that we've got, because we thought, right, that's robust. That'll give us a project that continues to be robust. And anything else is just extra positive to it. So, as I said, we probably won't see a new resource till next year.
Thank you. There's just another one that's come through. So does the chalcopyrite coexist with the chalcocite, or are they in different zones?
They're supposed to be in different zones, but the truth of the matter is the mineralogy has shown us a mixed combination, which I find intriguing, because I would have thought that the mineralogy would have been done previously and they would have detected that. I mean, we're detecting a few minerals that don't concern us, but are very different from what we've been led to believe. But, it's all good for us. So the hardest thing to leach, no denying it, the hardest thing to leach is chalcopyrite. Everything above chalcopyrite's easier. So chalcopyrite, bornite really are the hardest two to leach, and that's what we think we've cracked. The rest of them come, in our view, reasonably easy, even though people still stuff the easier leaches up.
I think that we have covered it. If we have missed any questions, please feel free to be in touch via our contact details on the website, and a copy of today's recording will be available online in the coming days. But thank you all for joining us.
Yeah, thank you. Thanks, everyone. For everyone out there, don't forget that what we're doing is technically complicated. And I cannot express enough that as an investor, do your own research. You need to do some reading about what we're trying to achieve. because when we're successful, that's when people sit back and go, whoa, these guys have done it. We're going to do it. But it's technically complicated. And you really do need to read and have a look at what we produce. We produce a lot of stuff. We do a lot of what are promotional things, but are actually technical talks to explain what we're trying to achieve. And if you want to know what we're going to achieve, remember the old chemistry experiment with the blue water and the steel wool and your plate copper? That's what we're doing. So it's chemistry. And thanks for listening. I really appreciate it. Sorry if I sound a bit aggressive, but I'm actually excited. It's not meant to be aggressive. And I'm excited, and thanks for listening. I really appreciate it.
Wonderful. Thank you, everybody. Again, we'll be in touch.